Hey friends, welcome to today's Singapore Market Digest. I'm Iggy from the Investing Iguana, and today we're looking at some interesting movements in the Singapore market. Let's start with the big picture. Singapore stocks opened lower on Monday, with the Straits Times Index, STI, falling a whopping 7%. This drop reflects broader concerns in the market, with major banks taking significant hits. DBS fell 14%. UOB dropped 13% and OCBC declined 9%. Other big names weren't spared either, with Yangzijiang Shipbuilding down 12% and Singapore Airlines falling 5%. These are substantial moves that deserve our attention. Now let's dive into some specific companies that are making headlines today. First up is Sembcorp Industries, a company that's been making significant strides in the renewable energy space. For those who aren't familiar, Sembcorp is a leading energy and urban solutions provider listed on the Singapore Exchange. The company has been pivoting from traditional power generation to renewables in recent years. According to their FY 2024 annual report released on April 1st, Sembcorp is well positioned to achieve its ambitious target of 25 gigawatts of gross installed renewables capacity by 2028. That's a big goal, but they're making solid progress. As of February this year, their gross renewables capacity stands at 17 gigawatt, which represents a notable increase from 12.9 gigawatt just a year ago. This rapid growth shows they're serious about their green energy transition. Beyond just power generation, Sembcorp is also expanding its land bank from 14,000 hectares to 18,000 hectares by 2028, while scaling industrial properties from 100,000 square meters to a massive 1.5 million square meters. This diversification strategy could provide multiple revenue streams in the years ahead. On the leadership front, it's worth noting that CEO Wong Kim Yin's total remuneration for FY 2024 stood at $6.4 million, down from $7.9 million a year ago. His cash bonus fell to $1.6 million from $2.5 million previously, which is tied to performance indicators like net profit, return on equity, and ESG factors. Looking at Sembcorp's stock performance, shares ended Friday at $6.41, down 3.2% or $3.21. This follows a bullish pattern we've seen in recent trading sessions. The stock has been showing some volatility, with historical data showing fluctuations between 631 and 676 in recent sessions. From a technical analysis perspective, Lim & Tan Securities provided an interesting outlook back in February, forecasting a bullish price direction in the short term. Their analysis highlighted that Sembcorp's stock price showed a positive shift in its prevailing trend after a 5.9% decline from its 2025 peak of 4 to 74 on January 9th. The bullish outlook was supported by upward trending Bollinger Bands and an RSI of 46, indicating room for further price appreciation. For the near term, resistance was expected at this 5.67 level, with support identified as 5,027. In the medium term, the analysis depicted a sideways trend with resistance at $5.85 and support at $5.10, while the long-term outlook remained bullish with resistance at $6.25 and support at $4.90. Next, let's look at the Hour Glass, a luxury watch retailer that's been making moves to expand its footprint. For those unfamiliar with the company, the Hour Glass Ltd is an investment holding company that engages in the retailing and distribution of watches, jewelry, and other luxury products across Singapore, Hong Kong, Japan, Australia, New Zealand, Malaysia, Thailand, and Vietnam. The company recently announced plans for its wholly owned Australian subsidiary to acquire a newly incorporated company SPV for a $90.0 million, about $72.4 million. This SPV is an Australian company whose principal activity is the retailing of watches and related products. This acquisition aligns with the Hour Glass's strategy of expanding its presence in the luxury watch market. Shares of the Hour Glass closed flat at $155 on Friday before the announcement. Looking at the historical performance, the stock has been relatively stable with a 52-week range between $146 and $173. The company has a market cap of $100 billion with earnings of $140 million and revenue of $11 billion in the trailing 12 months. From a valuation perspective, The Hour Glass is trading at a PE ratio of 7.1x and a PS ratio of 0.9x, which suggests the stock might be undervalued compared to industry peers. The company also offers a current dividend yield of 5.2% with a payout ratio of 37%, making it potentially attractive for income-focused investors. The Hourglass has been expanding its presence across Southeast Asia. In fact, the company recently celebrated its 15th anniversary for PMT The Hourglass, a joint venture formed in 2008 when Narantama Varanukup and Michael Tay teamed up to expand the company's reach beyond Southeast Asia. Over the years, PMT The Hourglass has grown from 2 boutiques to more than 15 locations across Thailand and Vietnam, all devoted to luxury watch brands like Rolex, Patek Philippe, Hublot, and Tudor. Now, let's shift gears and talk about something that affects all Singapore stocks, the country's monetary policy. The Monetary Authority of Singapore, MAS, implements monetary policy by managing the Singapore dollar nominal effective exchange rate, SNEER, within a policy band instead of tweaking interest rates. This unique approach makes Singapore's monetary policy particularly interesting to watch. In January 2025, MAS eased monetary policy for the first time in almost 5 years by reducing the slope of the SNEER policy band slightly. This move was primarily driven by a faster than expected fall in core inflation below 2% on a sustainable basis. There was no change to the width of the policy band or the level at which it is centered. The central bank lowered its core inflation outlook for 2025, expecting it to average 1 to 2%, down from its earlier forecast of 1.5 to 2.5%. Core inflation has moderated more quickly than expected and will remain below 2% this year, reflecting the return to low and stable underlying price pressures in the economy, said MAS. However, recent developments, particularly the announcement of new U.S. tariffs, have raised expectations that MAS might ease monetary policy further in its next meeting, likely on April 14th. Most analysts now believe that MAS will further slow the pace of the local dollar's trade-weighted appreciation. The U.S. tariff situation is particularly concerning for Singapore's export-oriented economy. Starting April 5th, 2025, all goods imported into the U.S. from Singapore will face a baseline 10% tariff. While this rate is lower than the tariffs imposed on other Southeast Asian nations, which range between 24 and 49%, it still represents a significant headwind for Singapore's economy. Deputy Prime Minister Gan Kim Yong has warned that the 10% tariff is expected to have a significant impact on Singapore's economy, cautioning households and businesses to be prepared for rough waters ahead. The government may even downgrade its full-year growth forecast range of 1 to 3%, given that the situation has turned out to be worse than expected when the projection was made. The impact of these tariffs could extend beyond direct exports to the U.S. As Selena Ling, chief economist of OCBC, pointed out, the broad-based nature of the tariffs may have knock-on implications on Singapore's shipping, logistics, and financial hub activities. If China and Southeast Asian countries see slower trade and economic growth, Singapore will suffer, as a lot of the supply chain, trade, and funding activities relating to these countries happen in Singapore. The volume of trade going through Singapore may be reduced as demand for goods from countries with high tariffs falls, and U.S. demand for Singapore goods would also likely decrease. Investment into Singapore may also dip as tariffs impact trade and business decisions. The semiconductor industry, a key sector for Singapore, is particularly concerned. Ang Wee Seng, executive director of the Singapore Semiconductor Industry Association, said the U.S. reciprocal tariffs will throw into disarray the cost management and investment plans of chipmakers worldwide. The newly announced U.S. tariff adds further complexity to an already intricate and globally interdependent semiconductor supply chain, he said. Despite these challenges, Singapore's stock market has shown some resilience. The benchmark, Straits Times Index, closed 0.3% down at 3,942.23 points on April 3rd, a much smaller drop compared to Japan's Nikkei Index, down 2.77%, Hong Kong's Hang Seng, down 1.52%, and Malaysia's Bursa, down 0.5%. Looking ahead, the Singapore market faces several challenges. The implementation of U.S. tariffs is likely to create headwinds for export-oriented companies. The potential for a global trade war adds another layer of uncertainty. If other countries retaliate with their own tariff measures, global trade could slow significantly, which would be particularly detrimental to Singapore's open economy. MAS has acknowledged these risks, noting that while an escalation of trade frictions could be inflationary for some economies, their impact on Singapore's import prices is likely to be offset by weaker global demand. This suggests that the central bank is prepared to take further action if needed to support the economy. For investors, this environment calls for caution. Defensive sectors with strong domestic revenue streams might outperform export-oriented companies in the near term. Companies with strong balance sheets and the ability to weather economic downturns could also prove resilient. The Singapore dollar has already weakened against the US dollar in recent months. In October 2024, the SGD was trading at a 10-year high of 1.27 per USD, but by the end of January 2025, it had slipped to around 1.35 per USD. This trend could continue if MAS further eases monetary policy. That's all for today's Singapore Market Digest. Remember, in times of market volatility, it's important to stay focused on your long-term investment goals and not get swayed by short-term fluctuations. I'm Iggy from the Investing Iguana, and I'll see you in the next update. Happy investing!